Moving on, the United States is preparing a fresh wave of tariffs on dozens of trading partners as President Donald Trump doubles down on using trade penalties as a negotiating tool. The new duties could affect countries including China, India, Japan, Canada, Mexico, the European Union and others, with Washington accusing some of the nations of failing to address forced labor concerns. The Trump administration is preparing new tariffs on around 60 trading partners, according to U.S. Trade Representative Jamieson Greer. Greer said that he expects the U.S. to take action soon, but did not provide a specific timeline. The tariffs are expected to replace a temporary 10% global duty imposed earlier this year after several of Trump's broader tariff measures faced legal challenges. That temporary tariff is set to expire on Friday. Analysts expect the new duties to range between 10% and 12.5%. Countries including Canada, Mexico, the European Union, Taiwan and the United Kingdom could face a 10% tariff rate. Meanwhile, major economies including China, India and Japan could see tariffs of around 12.5%. The U.S. says these measures are linked to concerns over forced labor practices. However, the European Union has already criticized such tariffs, calling them unjustified. The tariff push is also putting pressure on America's closest trading partners. Washington has announced a planned 50% tariff on many Canadian products scheduled to take effect in 30 days. Canadian Prime Minister Mark Carney said that Ottawa is considering all options and that discussions with Washington will intensify in the coming weeks. The move comes as the U.S. and Canada negotiate the future of the U.S.-Mexico-Canada Agreement, or USMCA, the North American Trade Pact. Trade experts say that the Trump administration may use an old and rarely tested provision, Section 338 of the Tariff Act of 1930, to increase pressure on Canada. Legal analysts warn the biggest risk is a cycle of retaliation where affected countries respond with their own tariffs against American goods. Separately, Washington is moving ahead with a 25% tariff on Brazilian goods set to take effect Wednesday. The U.S. has accused Brazil of unfair trade practices, and the tariffs could affect more than $11 billion worth of Brazilian exports to the U.S., and that's according to American Chamber of Commerce in Brazil. Some products, including beef, coffee, and certain aircraft parts, will be exempt. Trump has also announced a future tariff plan targeting imported generic medicines. A 100% sector-specific tariff on imported generic drugs is planned from August 2028, rising to 200% in 2029. However, Trump said that the rate would remain at 0% until August 2026 to give pharmaceutical companies time to shift production to the U.S.